So Circle, another one, pretty famous name, pretty high volume name, a cult name. There's a few things to learn here. It was very bullish in the pre-market. I had said in the pre-market planning that it's a little extended in the pre-market. So watch the 512s. If they hold, we long it. If it breaks down, then we get out. As soon as the market opened, initial bias was, yes, it's a long. It was an amateur move. I told the trader, do not size too much on the long. If you are longing, use a $180 risk. If you do not understand risk management in the stock market, watch my free risk management webinar and you will learn how to position size as well. So one thing to note is the circle was a little tough because it was extended. The pre-market ran from 163 to 188. There was no real consolidation, and right before the open also we see the big candles. So these people who bought right before the open, they would of course try to take the profits, and that would stop out the buyers as well. Always try to understand the psychology. And also you see that circle broke that 20 MTF cloud, failed to hold over that. As soon as I saw that, I told the traders to short it. Short 180, you can buy the 170 puts or you can trade shares, but you short versus 180. The targets I gave was 170, and right from that flush we hit the 170 target, $10 per share profit. Then we covered, we closed, we tried to long it, but then it fell down, it stopped us out. We took a $2 loss, but then we shorted it again. This is the concept that I teach again and again. Failed calls, one of my repeatable strategy and concepts that you can use for life. You short again, you buy those 160 puts again, and this time we're going to hit the MTF target, because what we are doing here is we are filling the gap. So this is a gap and crap setup. So the opportunity here to short versus 180, you are making almost $15 per share profit. Even if you're risking $1,000, you're making almost 8-9 grand. If you hold your position all the way, even if you sell half on the way, you'll still be making 5 to 6 grand on this position. 170 puts ran from $2, even if you missed the $2, ran from $3 all the way to $9. 300% return. These are the gap and crap setups, one of my favorite setups. The lesson you learned here, why it was a little risky long, what do you look for pre-market, and why it became a short even when we were little bullish bias in the pre-market. Beautiful winner for us. Pony was a short as well. You see, Pony was an earning play, neutral bias trade versus 15 long over it. So when it did not hold 15, you see that, you short it right away. MTF cloud, you short it. You don't think twice. It gave the target of 13. We hit almost 13.12. You could easily make a buck there if you're trading the options on Pony. 14 puts in the morning ran from like 40 cents to $1. You could make that 150% gains on those options. CAH was our earning play, which was a short. Didn't really work, but I did tell the traders to short the pops. So it did pop 144s, pulled back and pushed higher. So that was a kind of a loser for us. Did not really work, but I just want to show you that when you short the pops, you reduce your risk. Let's say you short at 143, you're risking 144. You're still getting out with $1 loss. You're just risking very low, because if it went lower, you could have made $2-3. So make sure you learn that.
Come to trade with Ripster. Join the community at www.tenettradegroup.com.